हेलो गाइस, वेलकम बैक टू द वीडियो। इस सीरीज में हम डिस्कस कर रहे हैं ईच ऑफ द चैप्टर्स, क्विक रिवीजन, इंपॉर्टेंट पॉइंट्स स्ट्रिक्टली एज पर द आईएससी सिलेबस, जो रिवाइज सिलेबस है आईएससी का। प्रीवियस वीडियो में हमने कवर किया था चैप्टर 1, ऑल द टॉपिक्स वन बाय वन एज पर द आईएससी सिलेबस। इस वीडियो में हम कवर करेंगे चैप्टर 2, बिजनेस फाइनेंस, वेयर वी हैव द सोर्सेस ऑफ फाइनेंस, डिफरेंट components of business finance, one by one. All these topics we will cover in this video. If you are new to the channel, do check out the entire channel. यहाँ पे बहुत सारे स्टडी मटेरियल्स मिल जाएंगे पढ़ाई करने के लिए, so that your complete preparation is there for the upcoming examination. पूरी प्लेलिस्ट बनी हुई है यहाँ पर, डू चेक आउट फॉर योर कंप्लीट प्रिपरेशन। दोस्तों के संग भी शेयर कर दो ताकि वो भी अच्छे से प्रिपेयर कर सके। Without further ado, let's get started with this chapter. The first topic that we have is importance of business finance. So business finance का importance जब लिखोगे, you have to write in 2 lines what is business finance. चाहे कोई भी topic हो, always make it a habit, just in 1 or 2 sentences you describe that topic. Business finance क्या है? Business finance refers to the funds required for various business activities, including starting a business, daily operations, expansion and innovation. Again, these are the keywords. Keywords अपने आंसर में ज़रूर रखना, जैसे daily operations, expansion and innovation. It ensures that a company can meet its financial obligations and invest in future growth. Importance क्या क्या है देख लेते हैं. Again, the answers here are crisp to the point. However, you can feel free to elaborate if you want to write lengthier answers. However, this will help you to score the required numbers. Number 1, ensures smooth operations. Finance provides business with the necessary funds to cover expenses like rent, salaries, and production costs, ensuring seamless functioning. Number 2, helps in business expansion. Adequate financial resources allow businesses to explore new markets, invest in advanced technologies, and expand operations. Number 3, facilitates decision making. Financial planning aids business owners in making strategic decisions regarding investments, acquisitions, and resource allocation. Number D, maintains liquidity and stability. Proper financial management ensures businesses have enough working capital to meet short-term obligations and avoid financial crisis. Number E, attracts investors and stakeholders. Strong financial health makes business attractive to investors, increasing funding opportunities through shares, debentures, and loans. Number F, supports innovation and research. Finance enables businesses to invest in research and development, fostering innovation and long-term sustainability. Number G, helps in risk management. Businesses face financial risks such as market fluctuations, inflation, and economic downturns. Proper financial planning helps mitigate these risks. Number H, improves efficiency and productivity. Access to funds allow businesses to upgrade technology, modernize machinery, and improve processes, leading to higher productivity and better quality products. Let's move on to the next topic. Sources of finance for different types of business firms. So क्या क्या sources हैं businesses के लिए? Finance is the lifeblood of any business, ensuring smooth operations, growth, and sustainability. Different types of business firms require different sources of finance based on their structure, size, and financial needs. So, for a sole proprietorship, what are the sources of finance? A sole proprietorship is owned and managed by a single individual, and financing options are usually limited. The main sources of finance include personal savings, the owner invests their own money; loans from friends and family, borrowing from personal connections; bank loans, commercial banks provide loans based on credit worthiness; trade credit, suppliers allow purchases on credit; government schemes, special financial support for small businesses. Again, a lot of students have asked whether you can write in points. Yes, you can write in bullet points. This will help the examiner to easily see the points and easily these answers become scoring for you. Let's move on to the next one, sources of finance for partnership firms. A partnership firm is owned by two or more individuals who contribute capital. The sources of finance include all of these. Now, important question दिमाग में रखना है जब पढ़ रहे हो, that MCQs तुम आंसर कर सको. If the options are there, four options are given, and you are asked to identify इसमें से पार्टनरशिप का सोर्स ऑफ फाइनेंस कौन सा है या कौन सा नहीं है, you should be able to identify that. So the first one that we have, capital contributions from partners. Each partner invests funds. Loans from partners. Partners may provide additional loans to the firm. Bank loans. Commercial banks offer loans based on business performance. Trade credit. Suppliers extend credit for purchases. And retained earnings, which is the profits reinvested into the business. देख लेते हैं for a joint stock company what are the sources of finance. A joint stock company requires substantial capital and has multiple financing options. Equity shares, issuing shares to the public. Preference shares, shares with fixed dividends. Debentures, long-term borrowing instruments. Retained earnings, profits reinvested into the company. Loans from banks and financial institutions, long-term and short-term loans. Public deposits, funds raised from the public. Trade credit, short-term credit from suppliers. ये थे सारे sources of finance. Let's move on to the next topic that we have, meaning of financial planning. Financial planning business के लिए बहुत ज़रूरी है. So what is the meaning? Financial planning is the process, again, don't miss out the word process, of estimating the capital required for a business and determining how to allocate financial resources efficiently. It ensures that a company has the right amount of funds at the right time to meet its objectives. Definition wise, financial planning refers to the process of setting financial goals, estimating the future financial needs, creating strategies to achieve those goals. It involves managing income, expenses, investments, and risks to ensure financial stability and growth. Let's move on to the next topic, which is features of financial planning. What are the features of financial planning? Financial planning is essential for businesses to ensure efficient allocation of resources and long-term stability. Here are its key features. Goal-oriented approach. Financial planning focuses on setting clear financial goals such as profitability, liquidity, and growth. Estimation of capital requirements. It helps businesses determine the amount of funds needed for operations, expansion, and investments. Now, in the books, you will find that the points are more elaborate and you need to write more. However, students who don't find that easy to remember, you can refer to these answers, and this will definitely help you to get more than average numbers and you can improve your scores rather than learning the lengthy answers from the book. This will be quick aid to memory. Number three, determining sources of finance. Financial planning identifies suitable sources of funds such as equity, debt, or retained earnings. Risk management. It ensures businesses are prepared for financial uncertainties and minimizes risks associated with investments. So, financial uncertainties and minimizes risks are the key words here. Budgeting and allocation. Financial planning ensures efficient distribution of funds across different business activities. So here efficient distribution of funds is the key word. Flexibility and adaptability. A good financial plan can be adjusted based on the changing market conditions and business needs. Let's move on to the next one. Point number 7, monitoring and control. Financial planning involves tracking financial performance and making necessary adjustments. Ensuring liquidity. It ensures businesses have enough working capital to meet short-term obligations. And maximizing returns. Financial planning aims to optimize investments and maximize profitability. Let's move on to the next topic that we have, importance of financial planning. Financial planning is essential for businesses and individuals to ensure efficient allocation of resources, financial stability, and long term success. It helps in managing income, expenses, investments, and risks effectively. So, what are the importance? Number one, ensures availability of funds. Financial planning ensures that businesses have adequate funds to meet operational and expansion needs, preventing financial shortages. Number two, helps in achieving business goals. A well structured financial plan aligns financial resources with business objectives, ensuring smooth execution of strategies. Number three, reduces financial risks. By forecasting future financial needs and challenges, Financial planning helps businesses mitigate risks such as market fluctuations and economic downturns. Number 4, improves decision making. Financial planning provides a clear roadmap for investment, budgeting, and resource allocation, enabling informed decision making. Number 5, enhances profitability. Efficient financial planning helps in cost control, optimizing investments, and maximizing returns, leading to higher profitability. Next point, number 6, maintains liquidity. Proper financial planning ensures businesses have sufficient working capital to meet short-term obligations and avoid financial crisis. Supports business expansion. Financial planning enables businesses to explore new markets, invest in advanced technologies, and expand operations strategically. Number 8, attracts investors and stakeholders. A strong financial plan enhances investor confidence, making it easier for businesses to secure funding through shares, debentures, and loans. Number 9, ensures compliance with regulations. Financial planning helps businesses adhere to tax laws, financial regulations, and corporate governance requirements. And number 10, encourages savings and investments. For individuals, financial planning promotes disciplined saving and investment habits, ensuring financial security and wealth accumulation. Let's move on to the next topic, factors affecting capital structure of a business. The capital structure refers to mix of debt and equity used by a company to finance its operations. So कितना debt लेगी a company, कितना equity share issue करेगी, उसके ऊपर depend करता है. The right capital structure ensures financial stability and profitability. Several factors influence the company's capital structure. So देख लेते हैं what are the factors. Number 1, business risk. Companies with high business risk prefer lower debt levels to avoid financial distress. Stable businesses with predictable cash flows can afford higher debt. Cost of debt and equity. Debt is cheaper than equity due to tax benefits, but excessive debt increases financial risk. Companies must balance the cost of borrowing with shareholder expectations. Control considerations. Issuing equity dilutes ownership. ज़्यादा शेयर इशू करने से ओनरशिप लोगों के हाथों में चले जाते हैं. ज़्यादा पीपल के हाथ में ज़्यादा ओनरशिप आ जाता है. While debt allows promoters to retain control. Family owned businesses often prefer debt to maintain control. So, basis all this, the company will decide that whether they should go for more of equity or more of debt. Number 4, growth and expansion plans. Companies with aggressive expansion strategies require more funds, influencing their capital structure. High growth firms may rely on equity to avoid excessive debt burden. Industry norms. Different industries have different capital structure preferences. Capital intensive industries, for example, manufacturing, often rely more on debt. देख लेते हैं next points. Number 6, tax benefits. Interest on debt is tax deductible, making debt financing attractive. Companies with high taxable income may prefer debt over equity ताकि tax कम देना पड़े. Market conditions. Favorable stock market conditions encourage equity financing. High interest rates make debt financing expensive. Basis market condition also company may decide कि debt पे ज़्यादा जाना है या equity पर. Number 8, financial flexibility. Companies prefer a capital structure that allows easy access to funds when needed. A balanced mix of debt and equity ensures financial flexibility. Company prefer करती है a balanced mix of debt and equity ताकि financial flexibility बनी रहे. Regulatory requirements. Government regulations may impose restrictions on debt levels. Companies must comply with financial regulations while structuring capital. फाइनेंशियल रेगुलेशंस फॉलो करके ही उनको अपना कैपिटल स्ट्रक्चर बनाना होगा. और डेट लेवल्स अगर सेट है बाय द गवर्नमेंट, इसके बियॉन्ड वो डेट नहीं ले सकते, देन दे हैव टू गो फॉर इक्विटी. नंबर 10, प्रॉफिटेबिलिटी एंड कैश फ्लो. Profitable companies can afford higher debt levels due to strong cash flows. Firms with unstable earnings prefer equity financing to reduce financial risk. Unstable जिनकी earnings हैं वो equity ज़्यादा prefer करते हैं ताकि वो आराम से अपना डिविडेंड पे कर पाएँ. जब अर्निंग ज़्यादा तो ज़्यादा डिविडेंड, जब अर्निंग नहीं तो नो डिविडेंड. लेकिन अगर डेट इशू करेंगे तो उनको फिक्स्ड इंटरेस्ट हर बार पे करनी होगी. जब अर्निंग्स ज़्यादा नहीं होगी देन दैट इंटरेस्ट विल बिकम अ बर्डन फॉर द कंपनी. नेक्स्ट चले आते हैं फिक्स्ड कैपिटल. व्हाट इज द मीनिंग? Fixed capital refers to the funds invested in long-term assets that are used repeatedly in business operations. These assets are not consumed immediately but contribute to production and revenue generation over time, like fixed assets. तो फिक्स्ड कैपिटल डेफिनेशन देख लेते हैं. Fixed capital is the portion of total capital that is used to acquire fixed assets such as land, buildings, machinery, equipment, and vehicles. These assets help businesses operate efficiently and expand their production capacity. तो efficiently काम करने में और expansion में काम आता है ये fixed asset, which is fixed capital. Let's move on to the factors affecting fixed capital. So, what are the factors? Nature of business. Manufacturing businesses require more fixed capital for machinery and infrastructure. Trading businesses need less fixed capital as they primarily deal with goods distribution. Number two, scale of operations. Large scale businesses require higher fixed capital for extensive infrastructure. Small scale businesses need comparatively lower fixed capital. Number three, type of production process. Capital intensive industries, for example, automobile manufacturing, require more fixed capital. Labor intensive industries, for example, handicrafts, require less fixed capital. Number four, growth and expansion plans. Businesses aiming for rapid expansion need more fixed capital to invest in a new facility and technology. Number five, technology upgradation. Industries with frequent technological advancements require more fixed capital to replace outdated machinery. Number six, diversification of business. Companies introducing new product lines need additional fixed capital for new equipment and facilities. Mode of acquiring assets. Business purchasing assets outright need more fixed capital. अगर वो खरीद रही है तो ज़्यादा फिक्स कैपिटल चाहिए. अगर वो लीज पर ले रही है then they require less fixed capital. Number eight, level of collaboration or joint ventures. Companies in joint ventures may share assets, so thus reducing their fixed capital requirements. Number nine, government policies and regulations. Tax benefits and subsidies influence fixed capital investment decisions. जहाँ पे टैक्स बेनिफिट ज़्यादा है और सब्सिडी जहाँ ज़्यादा मिल रही है उसके हिसाब से दे कैन डिसाइड फिक्स कैपिटल ज़्यादा करना है या नहीं करना है. Environmental regulations may require businesses to invest in eco-friendly infrastructure. For that, they might need more fixed capital. Number 10, availability of finance. Businesses with easy access to long-term finance can invest more in fixed capital. जिनको आसानी से finance मिल जाएगा, they can invest more. Limited financial resources may restrict fixed capital investment. देख लेते हैं अब working capital. Working capital refers to the funds required for the day-to-day operations of the business. It ensures that a company has enough liquidity to cover short-term expenses such as wages, raw materials, rent, utilities. सारे bills कंपनी अपने टाइम पे पे कर पाए उसी के लिए working capital इंटैक्ट रखना ज़रूरी है. Definition of working capital. Working capital is the difference between company's current assets, which is cash, accounts receivable, inventory, and current liabilities, short-term debts, accounts payable. It represents the financial health and operational efficiency of a business. Again, financial health, operation efficiency are the keywords. Formula पता ही होना चाहिए. Working capital का formula है current assets minus current liabilities, which we can make out from here. Let's move on to the types of working capital. The two main types of working capital. Number one, permanent working capital. This is the minimum amount of working capital that a business must always maintain to carry out its basic operations. It remains continuously tied up in the current assets and is financed through long-term resources. Types of working capital: initial working capital and regular working capital. Initial working capital क्या है? This is required when a business is first set up to cover initial expenses like the preliminary expenses. Regular working capital है essential for the smooth and ongoing functioning of the business. Permanent working capital is crucial for business to maintain stability and ensure uninterrupted operations. Let's move on to the next one, the temporary or the variable working capital. This is the portion of working capital required over and above the permanent working capital. It fluctuates based on business needs and is sourced from short-term financing options. What are the subtypes? Seasonal working capital, as the name says, seasonal business के लिए चाहिए होता है. During peak seasons, they require more working capital because demand is more. And special working capital is maintained as a reserve to handle unexpected situations or emergencies. Temporary working capital helps business adapt to changing market conditions and meet short-term financial obligations. Now let's have a look at the factors affecting working capital. Number one, nature of business. Manufacturing business requires more working capital due to high inventory and production costs. Trading business need less working capital as they primarily deal with goods distribution. Scale of operations. Large scale businesses require higher working capital to maintain inventory and manage operations. Small scale businesses need comparatively lower working capital. Business cycle. During economic booms, business require more working capital due to increased demand. During recession, business need less working capital as sales decline. Production cycle. Long production cycle require more working capital to sustain operations. Short production cycle need less working capital. अगर प्रोडक्शन का टाइम कम लगता है तो कम वर्किंग कैपिटल में हो जाता है, बट इफ द बिजनेस प्रोडक्शन साइकिल इज मोर लाइक गुड्स बनने में ज़्यादा टाइम लगता है, then they require more working capital to sustain the operations. Point number 6, credit policy. Liberal credit policies, which is offering longer payment terms to customers, increase working capital needs. अगर कस्टमर को हम ज़्यादा टाइम दे रहे हैं पेमेंट करने के लिए, इसके लिए बिजनेस को ज़्यादा वर्किंग कैपिटल चाहिए टू सस्टेन द ऑपरेशंस. स्ट्रिक्ट क्रेडिट पॉलिसीज रिड्यूस वर्किंग कैपिटल रिक्वायरमेंट्स. अगर क्रेडिट पॉलिसी स्ट्रिक्ट है तो वर्किंग कैपिटल कम में ही मैनेज हो जाता है. Number 7, availability of raw materials. Easily available raw materials reduce the need for higher working capital. Scarce raw materials require businesses to maintain larger inventories, increasing the working capital needs. Growth and expansion plans. Business aiming for rapid expansion need more working capital to invest in new facilities and technology. Technology and automation. Labor intensive industries require more working capital for wages and operational expenses. Capital intensive industries need less working capital due to automated processes. Government policies and regulations, tax benefits and subsidies influence working capital investment decisions. जहाँ पे ज़्यादा उनको टैक्स बेनिफिट और सब्सिडी मिलती है, कंपनी उसी तरफ जाती है ताकि वर्किंग कैपिटल इन्वेस्टमेंट उसी से इम्पैक्ट होता है. Regulatory requirements may require businesses to maintain higher liquidity. Before that, they need more working capital. Let's move on to the last topic in this portion, which is the comparison between fixed and working capital. The fixed capital and working capital are two essential components of business finance. While fixed capital is used for long-term investments, working capital is required for day-to-day operations. So the first point of difference is definition. Funds invested in long-term assets like land, buildings, and machinery are the fixed capital. Funds required for daily operations such as wages, raw materials, and utilities are the working capital. Nature, long-term investment, working capital, short-term investments. Purpose, fixed capital used for acquiring fixed assets that generate revenue over time. Working capital used for managing current assets and current liabilities. Liquidity, low liquidity as assets cannot be easily converted into cash in case of fixed capital. In case of working capital, liquidity is high as current assets can be quickly converted into cash. Sources of finance, fixed capital is raised through equity, long-term loans and retained earnings. Working capital is financed through short-term loans, trade credit and cash reserves. Examples of fixed capital are land, buildings, machinery, and equipment. Working capital examples are cash, accounts receivable, inventory, accounts payable. Impact on business. Fixed capital determines business expansion and modernization. Working capital ensures smooth daily operations and financial stability. Fixed capital is crucial for business growth, while working capital ensures operational efficiency. Both are essential for maintaining financial health. दोनों ही चाहिए ताकि business एक healthy तरह से operate कर पाए. So these were the topics in this video. If you have any questions, do let me know. I'll help you out in the comments box below. दोस्तों के संग भी शेयर कर दूं ताकि वो भी अच्छे से प्रिपेयर कर सके. And stay tuned, ऐसे और भी वीडियोस आने वाले हैं for your complete preparation and easy preparation to remember the topics easily. Thanks for watching.